Hey everyone, you're listening to the Active Turnkey podcast, a podcast designed for hands-off, passive real estate rental investors. In the Active Turnkey podcast, you'll hear Tom Olson and Jarrod Stotmeister discuss all things turnkey rentals with other turnkey providers, service providers, and rental investors. Our goal is to help you reach your financial freedom and whatever comes after that. Let's go. Welcome back to the Active Turnkey podcast. I'm your host, Jarrod Stotmeister
with
Olson
Olson.
Group, and that's Tom Olson.
Yep.
And so Tom's the owner of Good Success and the Olson Group companies. And welcome back. And today we are going to discuss what is financial freedom. It's out there. A lot of people talk about it. There's a whole bunch of stuff going on there, and you hear the buzzword. It's a common word. It's a fun, exciting word. What is it?
So what is financial freedom? So Jarrod, why don't you start and just tell people what is financial freedom to you? So What does that mean to you?
So financial freedom to Jarrod would be what allows Jarrod to do whatever I feel I should do at a specific time. So I guess the other way to look at it on the other side was what is holding me back from doing what I would want to do, created to do, all those things. Yeah. What is holding me back today from doing that thing? And then at that point, now I'm free to do that. Mm-hmm. So how am I free, or how am I not free today? More or less, that could be one way, is identifying those specific things and finding out what I would need to do then to get to that point.
So that's really good. So like we have a lot of people that follow us that are kingdom entrepreneurs, or they're purpose-driven people, and they really believe in God, or they believe in that, that they were created on this earth for a purpose. So basically what you're saying is that whatever's holding you back from your purpose financially is like that burden that you'd like to let go of in order, and if you could find a path or find a way to be able to become financial free, or may have enough money to be able to always be doing what you believe to be your purpose, or for you to believe what you believe to be, why you're placed on this earth. Like that's what financial freedom that's what it would do for you. Like that's why you want financial freedom.
Sure. I think it's probably a little bit broader. I think we may tend to look at financial freedom only in the money aspect. We may look at it strictly about money. Maybe there's some habits.
Well, the word financial is in financial freedom, so that's probably why we think about money.
Let me slow down here. Well, sure. But I think there's a reason why we spend money on certain things.
Sure. Yeah.
So what are some habits? What are some things that I may covet, or some things that I just feel like I have to have in order for me to live? And maybe I could identify. We've heard different people say, hey, part of financial freedom is, what do I need to have to live comfortably? Mm-hmm. And maybe I have a higher expectation for how I should live today. And so maybe by honing in on a few habits that I may have that are unnecessary today, that or sacrificing today, and it's kind of like your classic Dave Ramsey type concept, right? What do I need to do to sacrifice today that I can have later, or what have you? So I guess that's kind of some ways we can look at it. So sure, financially,
yeah,
but
we're going to
habits.
get into that in today's podcast. And I'm even going to do a little bit of fun with numbers a little bit, just to kind of
that sounds exciting.
It's my nerdy little part. It won't be on it for very long, guys. So
we won't.
If you're listening on a podcast, don't worry. Like, we're not going to break out the spreadsheets and show it to everybody. Although we may do that at a later time. But today we just really want to talk about what is financial freedom to different people, and why they might even want financial freedom, because it's very important. If you don't have a goal, and if you don't, too many people just kind of buy a rental because they want to buy a rental. Too many people just do an investment because they're told that they should be doing an investment. But it's up to them. It's almost more like a savings. It's not really like, there's no purpose for it. And I believe in the purpose-driven life. I believe in doing things on purpose, for a purpose, and kind of what you already brought up. There's a reason why we were all placed on this earth. And if we're not fulfilling that purpose, like, we got to figure out what that is and what do we need to get out of our life. So some of it is what you said, like discipline, saying no to maybe the things that you don't necessarily need today, to be able to allow you to fulfill that purpose with your time, talents, and treasure. Because you're right, it kind of does go into all those things. Like, right now, you got to make time. You have to use time to make enough money just to live. And somehow you got to figure out how to make it so your treasure is enough to be able to overcome that time that you're spending now, and be able to use less time to be able to make a living and more time in the actual purpose, and trying to balance that and get to that point as fast as you possibly can. I believe most people can create financial freedom in 7 years or less if they will focus on it. I love I love the number 7. I think it's kind of God's number of creation, but I think there has to have a plan. I mean, I always say God never, well, it's actually a song too, but like God never moves without purpose or plan. But so I kind of added to that, like, why should we? Like, why do we think that if the God of the universe planned everything out for us, and he's got a plan for our life, and he has a plan, then why don't we? And that's kind of like, we're going to get into that next week. I think next week we're actually going to talk about, like the actual plan itself, like helping you maybe create your own plan. And what I can't do is sit down with every single person and say, like, this is what you should do, because everybody's financial plan is a little different. But I think it's a great conversation today we can have about what is actual financial freedom. So you said that is what it was for you. To me, it's kind of about, like, to me it's about having all of my everything I need financially, from money wise at least, covered automatically every single month. Like, it's going to happen. I have enough margin in it so let's just say that my monthly, what I need to make every single month is $10,000 a month. So let's just say that's it. I want to have at least $10,000 a month in passive automatic income coming in from either loans that I've given to people, to rentals that I own, or to business that I've helped create and kind of have been able to let go of at some point. That's my financial freedom plan. But your financial freedom plan may be totally different. It may be all rentals. It may be all lending. It may be all in other types of investments that you want to do. I know stock market is a part of some people's financial freedom plan. It's not a part of mine, and we'll probably get into that, why I think the stock market's a ripoff for 99% of people at a different podcast. But we're not going to get into that today. So
that's good. No,
the first time I learned about. Well, Jarrod, why don't you explain, when was the first time you heard about financial freedom?
To be honest with you, it's been recent, and I think that's a huge part. So I was asked a couple weeks ago. I had an investor come in town, and I usually host investors. So if any of you guys are ever interested in checking out our product and seeing us,
come see the studio.
Come check us out here. But no, we take them and see everything, see the houses and all that. And they more or less, the question was, why? If it was this easy, why doesn't everyone do it? And I think
I love that question.
It's a great question.
Oh, it's a great question.
Well, it's a question for anything. I said you can ask that question about anything, right? Yep. But I think a lot of it has to do with just ignorance.
Yeah,
we just don't know. A lot of times we are told, or you have kind of your place, and this is where I'm at, and I'm okay with that. I'm middle class or lower middle class, or whatever that may be. And so coming from a totally different world, I would say that a lot of times you just don't know what's out there. You just don't know what you don't know. And then when you're kind of that concept or the principles are in front of you, it's mind blowing. And actually, when you come from that world, I think a lot of people would say, "Well, I just can't do that." Right. I can't do that because I'm here. But I think the one thing that's been really interesting to me is we have helped investors get to their financial freedom, is even once they've begun the journey, we have seen in some cases they've got there faster than they anticipated by their plan. And so that just even gives you the idea that, hey, it's possible. And actually, if you do things in certain ways, it doesn't always work out that way, but you can actually get there faster than you thought. So it kind of pushes away those doubts.
Right. It's more of the focus. Like,
absolutely,
what you focus on expands. If you think, like, if you're in it every day and you're focused on it, you're going to make it happen. Like, sure. I mean, I can tell you that's what happened for me. I had a 5-year plan, and I was like, I want to add $20,000 a year in extra passive income every single year. And by year 1, I was on track. By year 2, I was kind of behind. By year 3, I was more than on track. I had like 65, 70. And then in the middle of year 3, it was over with. It was done. And, for me, like, once you're into that point, it's almost like then you figure out what to do, and then you figure out like, okay, now let's go in let's go $1 million more in debt, and then figure out how to get out of that again, which is kind of, the story of people's life. But it gives you more options. It helps you get to that next level in your life. And it's like what you said to begin this podcast with, is it's the purpose-driven life. Like it's what you think you're here for. And I think that's kind of where I put myself. And, for us, like going down that path for me, and then coming right back through it, the second time you can even get there faster. So I know people that have become financial free, and then they've decided, okay, I'm going to open up a huge business, and I'm going to, go crazy with this. And it gives them the confidence. Why? They never would have been able to do that before.
Sure.
They never would have had the confidence to go and slay that next dragon or climb that next mountain until they got to that first financial freedom step. And then maybe they kind of go off of it, but then because they're willing to take the risk now, and then, and I'm young. So like, I feel like I can still take a couple risks in my life, right?
You're so young.
Well, I mean, for most people that are talking about financial freedom, it doesn't get talked about in the 40-year-old, 35-year-old. It doesn't. It's sad. It doesn't. I was actually talking to a 22-year-old this morning, and the thought and the concept of putting $1,000 away when a kid's born. So think about this. You put $1,000 in an account that grows 12% annualized every year. When they're 70, it's worth $1 million. Like think about, you could literally retire your kids by just getting $1,000 when they're born. Like you could give them the gift of retirement and give them the gift of $1 million by just giving them $1,000, as long as you can figure out how to get that thing to perform and earn 12% a year for and keep it deployed for 70 years. It's amazing. It really is. So for me, like the first time I learned about this concept, I was 20 years old, which I think is a lot younger than most people. I read the book Rich Dad Poor Dad, and he basically talks about every one of his houses is a cash machine. And he just had to figure out how many cash machines that he was only talking like $50 or $100 a month that they were making on each one of these properties. And he's like, okay. And at that time for him, I think he needed like 60 houses or whatever at $100 a piece each month. And he was financially free. And once he did that, then it was like, boom, what do I do next? And now you like know Kiyosaki's traveling the world, and he's talking in conventions, and he's helped many, many people become financially free because like it's a simple concept of just, you have to work. I think you brought up a really good point about the ignorance part of it, and maybe just the people don't know. But I think once people do know, I think so that's the first trap or the first, barrier. I think the next biggest barrier that people get stuck in or get trapped in is they want it now.
Absolutely.
So like that's the next thing you don't want to get trapped into. I think although I do believe you can get it in 7 years, and I think once you get in the focus and the mindset, you can probably get it done quicker. What I see too many times is that, for instance, this is an active turnkey podcast. Like obviously we sell active turnkeys. We talk about active turnkeys, and the biggest way you make money when you buy rental properties is not in the monthly cash flow. Yes, the performance say 200, 300, whatever it is, but like most real cash flows at the end of the day are positive, but they're not the $300-400 a month. So you can't build your whole financial freedom plan based off of those things. However, the bigger part of it is the equity that's being paid down, the appreciation that's happening, the tax deductions that you're getting on your active income. All those other things go into play with what you're doing. So it's a long game. So the question that you asked, I love that question, and it was actually great. It was an interview with Bezos and Berkshire Hathaway guy. What's his name now? One of the richest men in the world, Warren Buffett. So I mean, if Warren Buffett knows a thing or two about money, knows, and what he doesn't do is he doesn't go willy-nilly and invest in mutual funds. So there's all these financial people out there that are saying you should put all your money in mutual funds. Well, the richest people in the world don't put money in mutual funds. So I don't understand like why everybody's telling him to do that. He invests in companies, and he's very focused. He says he doesn't say put all your eggs in one basket, although he does talk about the basket, but have a basket full of very purposely driven eggs that you know something about, and that you've done your research and you have been able to like understand who's backing those eggs, and then put all your efforts into those.
Yes.
Because that's how, and what his biggest response to Bezos, though, was, because Bezos was like, just like you said, it's so simple. Why doesn't everybody do it?
Absolutely.
Okay? And the answer is because most people want to get rich quick. Sure. They don't want to get rich slow. Patience. And he even used the words, people don't want to get rich slow. Mm-hmm. And he's like, this is what I've done. I've gotten rich slow over the time. And that purpose, when you started with, takes time. Mm-hmm. Getting rich takes time. Becoming financially free takes time. Mm-hmm. Whatever those things are, those things take time. And if we expect things to be perfect right off the bat, then you shouldn't even try. Like, honestly, like, you don't expect things to be perfect. Always expect there to be bumps in the road. Just like you go to a job. Like, you go to a job and you think everything's kind of rosy when the first day you show up, and you realize, okay, I have to do things I don't want to do.
Of course.
Right? I mean, that's just the way it is. It's the way life is. It's reality. And I think too many people have been in that trap of, like, I don't know, so, like, I'm just going to stay ignorant. Yeah. I'm just going to play video games, or I'm just going to watch TV all the time, or I'm just going to work my job and complain about the government not giving me something, or whatever the case is. Or your boss. I'm going to complain about my boss because he doesn't care about me and whatever. Like, we can get stuck in that trap, which I think for a period of time, ignorance is acceptable. Sure. It's like a baby, right? You know, when you're a baby, it's acceptable for a baby not to understand this stuff. But as we grow older and as we mature, it's shame on us. Like, we should know that at some point, everybody had to have financial literacy. Everybody ought to know how to balance a checkbook. Everybody ought to have a budget. Everybody ought to be able to balance their budget. Everybody ought to be able to pay their bills on time. And this is just part of maturity. It's part of growing up. It's part of being an adult. It's reality.
They're basic steps adding up to the goal.
Right. So, basic steps. It's the same thing with financial freedom. You've got to. So as we grow, we get, as a teenager, we get in our 20s, and then we, a lot of people get in a bunch of debt because they go to college, and then now it's kind of like, well, now they got to tap the other side, get back to zero, and then figure out how to create financial freedom. I don't care how you do it. There's many different ways to create financial freedom. But I think everybody ought to have a financial freedom plan. But to me, financial freedom basically means that I have enough money covering all my bills that I can now go and fulfill my purpose. Kind of like what Jarrod said, but it lets me slay the next dragon that God has for me.
A couple things I got from that. I think that's excellent points. You mentioned the conversation between Buffett and Bezos. And Buffett's answer. I found it really interesting reading a book recently called God and Money. And one of the things they talked about, this is for investing in different types of purposes, of course. But in the shotgun approach, you mentioned mutual funds. It's really difficult to see the impact at such a small level. And so focusing in, you don't have to focus on one thing, like you said, but on spending more or investing more in particular objects in different areas. Even one of the guys in our network, Forrest talks about not going in too many markets. Now you're just creating more problems when things happen. But don't diversify, but don't go crazy diversifying. Go in maybe 2 or 3 markets, not 5 to 10. But more or less.
I don't think most people need more than 5 to 10. Like for me, it's like 3 and 4. Like to me, I would rather keep it simpler. I'd rather keep it, more under control. And right. I mean, to me, I would, and I know how much work it is to have 4 different main strategies that I use. So I think in order to add more, you've got to have trusted people. You've got to have and those. What does that take? Time. It takes time.
Absolutely.
So all of this takes time. I think financial freedom takes time. And guess what? If you don't reach it in 7 years, well, I promise you, if you set a goal to reach it in 7 years, you'll be a whole lot closer than if you just sit and do the same thing you're doing now. The definition of insanity is doing the same thing over and over again and expecting a different result. I think that was one of the smart people that have lived. I mean, way smarter than me. I mean, maybe not quite as smart as you, Jarrod.
Well,
but
you can always try.
I think it was Eisenstein. Just kidding.
Well, Einstein, yeah, she's Einstein.
No, it was Einstein that actually said that. And
that's good.
So anyway, just kidding.
Well, going back to the point though, I think that's stewardship.
Yes, absolutely.
When you're focusing instead of the shotgun approach, you don't really know how that investment's going. It was really interesting, but when you're focusing on a few things, now you are focusing more on that relationship or that investment. Excuse me. So there's some stewardship principles there. We'll have to cut that.
Jarrod needs to cough a little bit today, so we've got him there. He's awesome.
We'll cut that part, right?
Cut.
Okay, so and then so you, Tom, you mentioned a moment ago about the investing, about financial freedom and getting there quickly, like the 7 years. How 7 years? I mean, where that number comes from and why you have to do it. My question would be, what are some of the traps or pitfalls that can happen where people who are trying to go too quickly? What can happen in that situation where you're so focused, where maybe it can kind of absorb everything you do and make all your decisions, everything you do. So are there any pitfalls?
Absolutely.
What are some things?
That's kind of where I was. So this is a balancing act. You cannot just
balance.
like go off on a limb and just go crazy. Like you still have to be prudent. You still have to be responsible. I believe success breeds success. So try to get with some people, have some success with them. Understand everything's not going to go perfect, but as soon as things start performing, we'll then put more efforts and more energies into those relationships. I think, however, if you find people that are trustworthy, if you find people that are, things are working, it may not be perfect, but things are working and like you are making money and it looks like property values are going up, or if you're lending to people, people are paying you back, then you when things start working, like the worst thing you can do, like what's one of the worst financial mistakes for people in life? And this is probably going to shock people that I'm going to say this, because this is a little.
Here we go.
This might be a little. Controversial. Controversy.
Yeah.
Controversial, right?
Sure,
yes,
sure.
I can't talk today. But it's a little controversial. That's fine. But one of the biggest mistakes financially people can make, and I know that 50% happens to 50% of the people, but it's divorce. And it's the same way when you're working with a partner that's going to help you get to where you want to get to. So if you're going to pull away all of your resources, like, and I'm not saying that you're married to a financial advisor, you're married to a property manager, or you're married to somebody that you're loaning money. I get it. I'm not trying to say that at all. But what I'm saying is the last thing you want to do is distance yourself if things are working. I mean, from that and just like, because all you're doing at that point is wasting time. No, so normally when a divorce happens, it costs you a lot of money, and then there's a lot of other things that kind of come along with it. You don't expect, you don't really know. With a divorce with a husband and wife, you have kids, you've got other issues that you have to deal with, and then now you're bringing baggage into the next relationship that you have. So what I recommend is trying to have the upfront expectations up front when you're working with somebody, but continue that along. Like both people have to kind of manage each other to a certain degree, and just try to me, like, I think that can be a very big pitfall to that. Or like, again, like going into an expectation thinking that everything's going to be perfect every single time, I think is another pitfall that most people
definitely misconception.
And then they like pull their money and then they go somewhere else because they were promised a 30% return, and then they go make stupid decisions. And they go buy houses in Las Vegas. Don't buy houses in Las Vegas, guys. If I have to say that enough times in this podcast, I will. But just don't buy houses in Las Vegas, okay? Just stop it. Every single time I hear about somebody who bought houses in Vegas, like it was an absolute ripoff. So just don't do it. Go meet people. Go talk to people.
Every time.
Go and see what the types of neighborhoods and be comfortable with it. And if you're comfortable with it, great. If you're not, then go somewhere else. It's totally fine. That's what financial freedom means to me. And like I said, my first introduction to it was about 20 years old when I read Rich Dad Poor Dad. It was right when it first came out. And I really do appreciate Kiyosaki for writing that book and for kind of opening people's eyes to be able to think about, like, what would it be like if you had all your liabilities paid for by all of your cash flowing assets.
Let's go into a couple of things you brought up. And so first of all, you mentioned, so one of the things that I work with, I get to work with these investors, get to help them as they get their financial freedom. So I kind of help them all on the way. We're part of a team. So one thing that I've seen is once they get to that financial freedom, the idea of that they just left something. So they say the JOB, right? They left the JOB and now they're financially free, whatever that may be. But I find it interesting that in many cases they're creating JOBs when they become financially free in different ways. So and if anything, going kind of back into the same trap. So what are some, do you kind of follow what I'm saying? It seems like one thing that happens is because they use real estate as the avenue to get financially free, now they have to be real estate they have to be managing homes, or they have to be boots on the ground, going finding deals, where more or less they're working hourly, 40, 50, 60 hours a week in real estate, which is a job now. So of course, if that's what they want to do, they feel like that's
I guess
what
I would question, are they really financially free or not then if that's what they're doing? I mean, to me, most people I see go find something else to do, or they go try to help other people, bring other people into that fold, or they might, I mean, I've seen a couple that do that, but that's just because that's what they want to do. And if that's what they want to do, I guess more power to him. I know one guy became a property manager, and I'm like, okay, why you become a property manager? That's not really what I would do, but I mean, that's what he wanted to do.
Sure.
Other people that I know have started their own conferences or little mini masterminds for people to be able to help them, create financial freedom. I've seen people lay at a beach, which that's not really my thing. Sure. I've seen people do more travel and do more, which I do like to travel, but I mean, I've seen that. I mean, maybe if you can give me a better example, I don't really know.
Well, people it is that type of situation where they, from what I've seen, because again, that real estate was the avenue, they've tended to maybe now focus on a specific area where now they're doing deals in an area. And again, there's nothing wrong with that per se, but it's just the point was to get away from the job and to free you up to do something. But it seems like sometimes it kind of brings them right back into the job. So
that might just be human nature, just because people always want to have something to do. And if you don't have something to do, if you're not growing, if you're not learning, then you're dying. And it's kind of like, I think that's just in some people's makeup. Now, whether or not that's the best use of their time or not may be something that should be discussed at some point. Because I would probably beg to say that once you're at that point, it's probably not the best use of your time to be doing that. It's probably not, like, if you actually look at how much money per hour you're making doing that versus what you probably left your job doing, which you actually probably didn't mind so much.
That's the point.
I've even seen guys like go down to 3 days a week or go down to 2 days a week. They're going to still work their full-time, job. I mean, not full-time, but they're going to kind of make it more part-time because they make really good money doing it, and they still do enjoy doing whatever that they're doing. So I think, but that's the beauty of financial freedom, though, Jarrod, is that it gives you the option. Without that, you wouldn't have the option to be able to make that choice. So it gives you more choices. It gives you more options. And to me, like, that's one of the big benefits of financial freedom is the options and the choices that you get to make. I mean, for instance, we know people that, like, once they become financially free, they went back to the industry that they were in themselves, and they went and said, I have a burden for these people because this is kind of where I came up, and I know what they've gone through. Like, for me, at some point, like, I would even love to be able to help contractors, because contractors, like, they're normally really good hard workers. They're normally horrible with money, which means that they probably really need financial training. However, most contractors aren't making a ton of money, contrary to what most people believe, like, right now. But I mean, I know they charge a lot, but, like, at the end of the day, like, I can tell you, like, the end doesn't look very well for them. And sometimes maybe it's because of lack of discipline or lack of training on what they should be doing with their finances or whatnot. But whatever the case is, I do, like, for me, because I grew up in that, I have a burden to be able to help contractors and be able to help them figure out, what does financial freedom mean to them. I even wrote a book, Investors versus Contractors, because I've been in both of those seats and trying to, like, understand both people's perspectives and why investors sometimes don't like contractors and why contractors sometimes don't like investors, and how if they both work together, they can really make a better result. And they kind of need each other in a way. And if they would use the advantages that each one of them gives to each other, they could really be a whole lot more successful and really learn from each other.
And that's, like you said, I guess that's the advantage of financial freedom, is being able to find whatever that is and going and doing that thing. And one of my jobs as to help my clients is to understand that every investor is different. And so their criteria are always going to be different. And I do my best to learn what that is. And so the same thing goes for financial freedom. They're all going to be different. Right.
So for me personally, like, I have my financial freedom kind of outlined into, like, 3 major buckets. One is rentals. So one is I'm buying houses. My property management company manages them. That's a part of my financial freedom plan. Another part of my financial freedom plan is lending. Lending is done both, like, cash and also done in an IRA account. I think IRAs is something that we probably should talk about in the podcast, and helping people understand the benefits. Maybe we can have some people from some different IRA custodians on the podcast. But I do believe in like a tax deferred or tax free account. And those things I think have really helped me think more long-term picture, because obviously I can't really touch those until I'm 59 and a half. But like, to me, like that's going to be amazing. If I continue on the path that I'm in right now with my IRAs, like I'm telling you, like the numbers that we might do in a couple of minutes here just are staggering and can really blow some people's minds. So it's real estate. And for me, it's just single family rentals and maybe some duplexes. I don't have a bunch of multifamily stuff. You know, like to me, I think you can do multifamily, but I think it's almost like a hedge fund. I really do. Like, and I don't really think you make more money. I don't. I think that there's this perception out there that you do, or it's less risky, or whatever the case is. It's just less transparent. So all the stuff that happens, you don't know about. And that's why I like single family. I like single family because like every month you know what's happening in that rental, and I think there's more exit strategies. So I believe it's actually less risk on the back end than multifamily. But again, I'm not against multifamily. I would have multifamily. I would actually totally support it, and I do like multifamily. But that's why I particularly invest in single family. And then business. I do think that business is a piece where it is good to own equity in businesses. It is good to be able to take that equity and be able to make money long term with that equity. So again, mine's very simple, and I don't think that you have to be. I know people that do 100% lending. That's all they do is private lending, and they're completely financially free. With lending. So, I mean, you don't have to get very complicated. And a lender can have a very easy lifestyle if that's what you want to have.
No, that's excellent
Or
stuff.
You can spend more time in ministry or in purpose or whatever it is.
Yeah, to each his own, whatever that is. And I guess that's the point, getting each person to where they want to go. A couple things. So you already mentioned the numbers. We're going to get there next. But one question I wanted to, before we get there, one question I want to bring up are kind of the misconceptions of what, and you touched on it, what that financial number is. So we're going to talk about all that stuff in the next podcast, but specifically one of the misconceptions that you mentioned was the initial number or the idea that people have to be financially free. So it's like they have this number, but you said it, everything has to work perfectly, and specifically each individual investment. So if it's a rental, it always has to cash flow at all times at the exact numbers every day, right? So I'm kind of on the line. I don't know if you want to touch a little bit more on that, but I've heard you mention in the past, more or less, the idea of maybe someone needs 10 properties to be financially free. You actually think it's much more.
I do. Yes, absolutely. So I think if you're talking about rentals themselves, I believe that, this is just from my experience of what I've seen. I don't see people being completely financially free with rentals, unless there's two ways to get there. I think you can get there cash, or you can get there with leverage. I do love leverage, and I think leverage gives you a whole lot more bang for the buck. I think leverage gives you a whole lot more equity down the road. So think about it like it takes more properties, but you're also gaining a whole lot more equity every single month, and there's a lot more. There's tax advantages too, which I won't get into that too much. But like there's many different things that you're gonna get into with leverage. But you need, in my opinion, maybe I could be wrong, and maybe somebody lives a whole super simple lifestyle. Maybe they could get by with less. But most people I talk to are in that like $8,000 to $16,000 a month. Like that's what they need, or that's what they say they want in order to be able to retire.
Right.
And I'm not saying that that's for everybody. I really do know some people that would be totally fine on 4 to 6. I think that's probably a little lower than what most people would want. However, like my experience with people is like somewhere between $8,000 and $16,000 a month is what they need. And if you're gonna do it with just rentals, I believe you can. But if you do it, I think with leverage, like I really think you need to be thinking like 100 properties. And 100 properties, even if like best case scenario, you make like $30,000 a month, I think you can for sure plan on $10,000 a month. You know what I mean? That's $100 a property times. I mean, I know a guy who didn't retire until he had 150, and that was basically for him. He even said it was $15,000 a month. Even though, like, if you looked at his numbers, you'd probably say, okay, maybe he can make more. Sure. And there are probably some years and some months he does make more, but then there's some years and some months he doesn't. So being realistic and being reasonable, I do think if you're going to self-manage, which I don't always recommend because I don't think it's the best use of most people's time, I think you could probably get there self-managed with less. So you probably get there, probably 50 to 80 if it's self-managed, and I know people that are there as well. I got a guy come in the Community Go Giver event that 55, 60 properties he has, and he self-manages them. I do think. But the other direction is cash. So like, again, it's the slow route. Right. It's a little slower. You got to come up with the cash to be able to make these happen. But if you can go the slow route and stay in these all cash and not have to worry about the debt on the back end, you can obviously have financial freedom with a whole lot less. So I've seen self-managed. I've seen as low as maybe like 20. Maybe even less than 20. Like if you think about it, I see a lot of our performers and our things looking at like between $500 and $800 a month that are all in cash, depending on price point and how much you have in the property and where the property is or whatever. But if you can like count on like $500 a month, well, 20 properties gets you that same number. So like I've seen that. And, self-managed, you could probably get away with 20 properties. However, 20 properties self-managed is a full-time job. So maybe you don't want to do that. I mean, it's not what I would recommend. I would recommend, going for those larger numbers, going for diversification. Because the biggest nut you're going to get is when you go to sell if you will wait. Or the biggest thing you're going to get is the fact that you can pass it on to the next generation, and the next generation gets this massive benefit of the stepped up basis. And we won't get into that in today's, I think we talked about that a little bit, about, when we talked about why rentals, but I do think that people should always be thinking about the whole picture. It's easy for me. I'm a protagonist, so it's very easy for me to see like all different parts of the picture and all the different people that sit at the table. But for many people, they can only either see their seat or they can only see like one seat and one perspective, or they're just the person that like is antagonist, where they're just trying to antagonize people. But anyway, so I hope that answers your question.
No, that's excellent. That's exactly what we were looking for. So more or less in the freedom plan, you have to expect for things to come up, and you're not going to get the perfect numbers on every deal. So that's just reality, right? So add that into your freedom plan, realizing you probably need a little bit more than what you think you need. More or
Absolutely.
Less. Okay.
And again, like I think there's a lot of accusation about people not being transparent. I don't think that's the case at all. I don't think anybody tries to not be transparent. And I believe there's other benefits too that like people get and they don't even realize half the time. Like for instance, the raise in rents. Like who talks about that? I don't ever hear people talking about that on podcasts. Like, so just in our area, Jarrod, I'll ask you. Since you started working here, which was how long about? Like how long? So you've been doing this for about 5 years. Yeah. Okay. So let's just use Hammond as an example. So Hammond, Indiana, how much have rents gone up in Hammond, Indiana in the last 5 years?
I would say conservatively, minimum $100. I would say $100, $150.
Okay, so what kind of percentage is that then? So I think that's really low. But maybe rents were a little higher than because I remember rents in Hammond of like $99.50, and the same rents now are like $11.95 to $12.95 for the exact same house. And I've even seen $13.50 in some of those houses. Right. So to go from $9.50 to $13.50 is a $400 jump, which is like 45% ish. Like nobody really talks about that. And that's like a month. So like
yes, it is.
If you got into this market in 2006, right before it crashed, okay, rents in the south part of Hammond were because I remember it was $900 for a 3-bedroom without a garage. And it was $950 for a 3-bedroom with a garage. Like it was 3-1s, guys. 3-bedroom, 1-bath, slab houses, 950 to 1,250 square feet, and these were renting between $900 and $950. It was like butter. Like and as soon as you put it on Craigslist, it would be like 30 people were going to show up for an open house, and you'd have it rented in a weekend. Like it's the same way it is now. So that hasn't changed. But between now and then, those same houses now are renting between $11.95. I think it's $11.95 with a 3-bedroom, 1-bath, and $12.50, maybe even $12.95 for a 3-bedroom, 1-bath with a garage. So
that's bare minimum, actually. Yeah.
Right. So like if you think about those numbers, those have gone up like $300. So that's 30% in just 5 years, and that so that's a lot of extra money because it's all profit.
Sure.
It's way more, like if you can raise rents, it's way more profit than if you're just you know what I mean? Like tweaking other numbers, because now it's every single month, and it's like it all goes to the bottom line.
Pretty sure your mortgage payment was the same.
Right, your mortgage payment didn't go up. I mean, taxes may have went up a little bit, but they're not going to go up $300.
Right.
You know, they're not going to go up $3,000. I mean, they're not even $3,000. So, there's a lot more benefits that people get in those things. And you know, a friend of mine, Glenn, he always basically tells people, he's like, you know, the maintenance that you do, you're going to get back in increased rents over time. Like that's the way some people think about it. Like we don't even say that. We don't even put that in our performance. We don't say anything about that. You know, like you are going to get increased rent. It's going to happen. Like houses are not getting cheaper, and house rents are not getting cheaper, and they're not going to get cheaper anytime soon.
Nope.
That's why Grant Cardone is out there like buying his thousands of houses or whatever he can possibly buy, going all in with his Cardone capital, because like he knows in 10 years from now rents are not going to be cheaper.
That's right.
So it's kind of like one of those things it's not going to change. It's not going to change. You're not going to, you know, we're not going to wake up in 2030 and like rents are $500. It's not going to happen, you know. So get in now while you can get into fixed prices and get into a fixed 30-year mortgage. And like that, like you said, that payment's fixed all the way down. Right. Yes, there might be some maintenance that's a little bit up and down. Yes, there might be some other things that go up and down. The taxes may go up and down a little bit. Those are a little volatile. Yes, you may have repairs or CapEx things that you have to take care of. I mean, for our properties, ours are pretty much really well maintained, ready to go. I shouldn't say well maintained, but like most of the stuff's been fixed right at the time when they buy them. So we pretty much like really try to give an amazing product to our customers and to our tenants. You know, like nobody else that I know of in this area is putting good granite countertops for their tenants. Like I believe it's a really big deal to be able to give them the nicest house in the area. They stay longer, they take care of the place better, and I think the material that you put in it lasts longer as well.
Sure.
So
absolutely.
Anyways,
no, I all that's excellent stuff. So you were promising us numbers.
Absolutely.
You were teasing
you know
us.
what? Like, so I just want to go over some quick numbers. We don't have a ton more time on this, but so me and my wife have been investing in our IRA. So I'm just gonna go with the IRA. So we've been investing in our IRA for about 4 years now, and they actually just raised the limit to $6,000 a year. Okay, so what I'm gonna do 25 years. So this from the time right now I'm 41 years old. This will basically put me at retirement age, it's like 66 years old. So if me and my wife continue to invest $6,000 a year, and right now in just the IRAs, not including any other accounts, but just the IRAs that we have currently right now. That we, like I said, just started 4 years ago. I haven't done any big 401k in these IRAs. I've just done like the maximum distribution for the last 4 years. And then we've just invested these and just made, you know, right now me and my wife are probably averaging about 13 to 14% in our IRAs. And I know that everybody can't do that. That's fine. I have a little bit of insider information, which is actually legal in real estate and not legal in the stock market. Another reason why I think the stock market's a ripoff. Another episode, right? So anyway, but right now me and Becky have about 65 grand in just the two accounts that we've only put our maximum distribution in. So if I look at that and I can continue to make what we're making right now, Jarrod, what's that number right there?
It's really big.
So for 25 years,
that's $2,800,000.
Right. So let's just say I were to back off. Let's just say let's just say I'm going to continue to make this kind of return now, but then when I retire, I'm like, okay, I want to be a little hands off. These are pretty hands-on deals for me. Okay. Let's just say by then I want to be a little bit hands-off, and let's just say I want to make 10% on my money, which I think is a really pretty hands-off deal right now. Maybe even 8 if you really want to be conservative. But that's a pretty good number every year. So what's 10% of, let's just do simple math, what's 10% of $2.8 million?
That would be $280,000.
Do you think I could live on that? I think so. I think I could do that. I think I could do that. So that doesn't even account. That has nothing to do with the other lending deals I do. It has nothing to do with the real estate I own now that in 25 years will be worth way more or will be paid off or the rents will be way higher or anything else that we talked about. Like, this is the simple type of things that I think everybody should be thinking about. So let's just say you're out there and you got a 401k and you're like, I'm thinking, should I roll this over to a self-directed IRA or whatever? Let's just say you have $100,000 in it right now. $100,000. Okay? And you've got let's just say you only have 20 years left. Okay, so you're 45, you got 20 years left, and let's just say you can earn 11% on your money. Okay, so you got $100,000 right now. I know a lot of people that are in this. They had a job. If you can make 11% on your money, like what's that number?
It's a really big one, 4.7.
Right. So if you have $100,000 today and you have 20 years left, and I'm sorry, I messed up. I'm sorry. That's not right. Okay, so this is right.
1.19.
1.19. I was like, that doesn't sound right. Okay, so $100,000 invested for 20 years, because this is the thing, it takes time. The younger you are out there listening right now, the more important this is to get going now.
Sure.
If you can start with like 1,000, let's just back this up. Let's just say you had 40 years. Okay, so you're talking about a 25-year-old, because these are the people I really want to talk to. $5,000. What's that number, Jarrod?
3.8.
So if you had $5,000 today, and you could invest $6,000 every year between now and the time, you know what? I just did me. I thought my number was a little low, but I'll go back and do my number in a second.
Sure.
So $5,000 right now. You have $5,000 in it for 40 years. If you're a 25-year-old and you've got 40 years at 11%, if you continue to put $6,000 away every single year, you have $3.8 million. Well, most people are going to get into this and thinking to themselves, they don't need to wait that long, right? So let's just say they put that down to 20 years. It's still $425,000. Most people that had an extra $40,000 per year, like it would change what they do. It would change like why they do it. So let's go back to mine. I'm sorry. I knew I messed something up. So I have $65,000 right now in our two accounts, and we're actually depositing $12,000 because that is like we're doing maximum distributions for both of us, and we've got 25 years. Not 200 years, Tom. That was a really big number. So it's 2.5. That sounds more like what me and Becky have been talking about. So and actually, I'm sorry, we've been actually making 13%, not 11%. So look at this. This is what mine and Becky's IRA looks like by just putting in. Like we didn't put no big lump sum in. We have just been putting in $5,000 for me and $5,000 for her for the last 4 years.
It's a good number.
It's to me like, if you're not doing this, if you're not thinking this way, if you're not thinking like, gosh, like I have got to make this this is a discipline. This is like, okay, maybe I'm not going to go to coffee every day, or maybe I'm not going to go on a vacation in 1 year because like I don't have the money to do it this year, or maybe I'm not going to be so extravagant at Christmas time, or maybe I'm not going to do whatever it is that I'm going to do. Those daily disciplines, this is what the result is. The result is short-term gain for long-term sacrifice, and I think that we're getting away from that as a society, and it's so sad to me, and it's so hard to be able to see, because too many kids in their 20s think they should have it all.
Absolutely.
They think they should have their own business. They think they should be out there on Instagram and on Facebook, and they think that they've got it all figured out. But just because you know how to do a skill, or just because you know how to do something, gives you no right to be in that position. You're not there. You haven't earned it yet. And you haven't, like, this is why I love the military. The military is so cool and so awesome because and I'm telling you, like, I love hiring military people because, like, they knew they had to follow first in order to lead. And this is a great way to lead, though. If you think about it, like, you can lead your family, you can lead your whole financial future if you will be disciplined. If you will set aside the money, if you will make the trips out to see people, if you will find people to connect to, create long-term relationships that are going to go on for decades. That's where you want to invest your time. That's what you want to do, is find the people and have financial freedom, but find it with people that you want to work with.
So I see a couple key words that have really jumped out here for financial freedom, and what it ends up being. It ends up being discipline, focus, stewardship. Kind of the core words that we would always mention, but it's small steps over a long period of time.
Yep. I mean, which is our definition of growth.
There you go.
Olson Group, one of our core values is growth, and it's like sometimes you have to say no in order to say yes, but then you got to continue to say yes to the right thing over and over again. It's the discipline of the daily activities that will bring you financial. It's the only way to get success in any kind of success, whether it's financial success, financial freedom, whether it's spiritual, mental,
absolutely,
health wise. It's sad. You see some people that get sick and they die really young because they didn't take care of their bodies, didn't take care of their health. And I think it's something that we if you can get disciplined in one part of your life,
Sure.
it can really roll into other part of your life. And I think the two that I've seen that really kind of help dictate is finances and health, like eating, working out. Like those are the two things. If you can get a hold of one of those, normally other parts of your life you'll become more disciplined in. And I'm not even the one to tell you that I'm the most disciplined person in the world. My wife's probably a little bit more disciplined than I am. So thank God I married a disciplined woman. And I know your wife's the same way because we know you're not disciplined, Jarrod.
Of course not.
But I'm just kidding. So yes, but the thing is like. It is very important. The discipline of putting the money aside and the discipline of making the investments and the discipline of creating the relationships and knowing this is a long-term deal is huge.
Well, I think this is great. So financial freedom is so important to us here at Olson Group. And I know, Tom, you with the education company with good success, it ties in beautifully into there as well. It's what we do. We build rental portfolios for investors. And so getting them to that financial freedom, and we feel like we get, of course, we make money along the way. It's what we do for a living, but it's also the fulfillment of being able to help people get there. It's such an awesome opportunity to be able to do that. Next week, we're going to talk about how to get to financial freedom. So we'll stay on this topic, stay on this line. I'm really looking forward to getting into maybe a little bit more nitty gritty.
Yeah, we're going to give you just a simple 5 or 6 step process. And I think that's what some people need. Some people just need a process laid out for them. Sure. I'm not going to dig down with every single person and give you a spreadsheet and show you how to actually do it. You're going to have to do that on your own.
Sure.
So it does take some work.
Some basic concepts.
But I'm going to give you a basic process in which, and honestly, I think it's a basic process to have success in any part of life. So it's not just financial freedom, but I think you can have success in business, actually have success in your marriage, have success in anything if you'll just use these 6 steps.
Awesome. Well, it's going to be exciting. Thank you for joining us here today. Remember, we do build rental portfolios for investors. So if you're looking
every day, every week,
that's what we do.
Yep.
That's right. So if you're interested in reaching out and you want to build a portfolio with rentals, you can reach out to me, Jarrod at Buy Olson Group. You can also go to our website. You can go to buyolsongroup.com.
I really encourage you to do that as well, because a lot of people are out there. They're like, "Hey, how do I get on your list?" And I'm like, "Well, just go to buyolsongroup.com, put your name in there." Sometimes I hook people up with you, but I mean, for the most part, like if you're out there right now and you're saying, "Hey, I would love to know more about the active turnkeys you guys have available," or I'd love to know more about the turnkey product that you guys, have. Like, if you want to get on that newsletter every week, we kind of send stuff out, and sometimes it's funny. Jarrod can be funny, or at least he thinks he is sometimes, and sometimes he is, and sometimes he's not.
I think I'm funny.
So he thinks he's funny, so that's funny, right? So, but I'd love to get you guys on there, and I think that a lot of people would love to be on there. So just go to buyolsongroup.com, and you can sign up for our newsletter there, and
also, awesome. We have the Active Turnkey
book. Oh, yes, absolutely.
Book.
I haven't been talking about this much, but I've written Active Turnkey, the best way to buy rentals.
There you go.
And if you'd like to get a copy of it, there's 2 ways to get a copy. First of all, you can go to atkbook.com, and that way I can get your information, and you can kind of be part of the Good Success community. And it's kind of a free plus shipping offer. I think it's like $8 for shipping and handling or whatever. Or you can actually purchase this on Amazon as well. I think it's a little bit more money to purchase on Amazon, but either way, you guys can either go to atkbook.com or go to Amazon and just look up Active Turnkey, and they will deliver it to your door probably faster. They probably will deliver it faster than we will. So if you are interested in the Active Turnkey book, the best way to buy rentals, I would tell you to go pick it up there.
Awesome. Well, thank you for joining us here on the ATK podcast.
Active Turnkey, the best way to buy rentals.
Thanks, guys. Olson Group Network makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice. Unless specifically stated otherwise, Olson Group Network does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. Any third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of Olson Group Network. Olson Group Network assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast or the compliance with the applicable laws of such materials and or links referenced herein.